Okay, fine. Hey, one and all, this is Dr. Sivaraman of iknowindices.com, and I was giving the part 1 of Tracking the Forex Market Together webinar between 8 and 8:45 GMT, and now between 14 and 14:45 GMT, I am going to give the part 2 of the webinar. So it is a simple market tracking technique. We use simple techniques, identifying the type of moves which are being made in various currencies, the majors and the commodity pairs in the market, using the live market code page, and try to identify what could be the next possible move, then accordingly take positions. So I was explaining this during part 1 of the same webinar during the European session, and at that time I had taken certain decisions to take the positions, and I will explain what happened to those positions now. And before that, I wanted to go to the live market code page and show to you what are the changes which have happened in the market when compared to that of the European session. So I also given the link for the live market code page. And I'll focus the camera over the live market code page. Here you come across Euro is currently trading around 1.2634, 1.2633, and the high was 1.2689, the low was 1.2615. 52 pips negative net change is seen. It is 14:05 GMT. And during that of the European session, during the start of the webinar, you would have noticed that around 8:30 GMT for the data release, they just made a quick drop below that of the initial low 1.2646. And that, with the help of another slide, I showed it. I'll probably show that particular slide also. 1 minute. So initially we make a note of the initial lows and the highs set around 3:30 GMT using the live market code page. At the time, Euro was showing the low of 1.2646, and from there during the European session they came down to 1.2615. Currently you come across in the live market code page, and then they went up to 1.2689 without breaching it. They came down again. And now they have come below this initial low, but they have not breached the new low what they have formed during European session. And similarly, in the case of GBP, the initial low 1.5742 they breached before the data release and continued the move on the downside around 8:30 GMT and formed the new low 1.5679, and they did not cut the low for new low for 30 minutes and started coming closer to that of the psychological level 1.57. Then I initiated a buy. So when they made the downward stop and come to that of the initial low, I had taken a buy in the case of Euro during that of the European session. I'll show the fate of that particular trade. Similarly, once they crossed the psychological level 1.57, after forming the new low 1.5679, then I taken a buy. And also I taken a buy in the case of Australian dollar, and they just formed the initial low 0.9742 around 3:30 GMT, and then during the European session came down about 3 pips, 0.9739. They became 30 as the new low, and then subsequently they had taken it above that of 97.42 in less than 30 minutes. And as you all know that the commodity pairs lead the rally and lag behind. So when the commodity pairs started leading the rally on the upside, I initiated the buy in the case of Australian dollar and also GBP and Euro. So this is how the trading decision was taken, because they formed the new low after the data release. and within 30 minutes they just came to that of the initial low in the case of euro and Australian dollar. So that indicated that they will be handling euro GBP cross. Besides, GBP is also expected to firm up a little bit. I am not focused at that time during that of the denominator currency, because in the case of USD yen, they just breached the initial low 79.52 and came down to that of 79.34, and still they are holding it below that of 79.52. And in the live market code page, euro, GBP as well as USD yen, still they are showing the negative net change. As a result, you find, I'll go to that of the live market code page. So euro, GBP, USD yen, all are showing negative net change, and they come closer to that of the low after making about 100 pips drop in the case of euro yen and GBP yen for the US session. So this is how every session they just make a downward stop and then make a rise and make an upward stop and again come down and make a downward stop and things like that. In this process, just a small firming up of 30-40 pips, we will call it as bullish, or as drop of 30-40 pips. We cannot call it as a bearish conditions in the market, because ultimately we need to understand what is going to be the next move. If we simply become bearish, then we feel like only doing sell and buy trade and not the buy and sell trade at any given time frame or at any given level. So when all turn short and try to sell and somebody is buying there, we have to read the intentions of those people who are buying at the lower level. So after the rise, if we try to do a breakout trade, then they show the downward move and hit the stops before making further rise. This is what's happening in the market. So this cunningness we need to understand, other than simply going with it of the various other attributes of the market. Now I'll go back to that other PowerPoint presentation. Okay. Now, based on that understanding, based on the initial lows and the highs, I had taken the positions during that of the European session around that of the initial low 1.2646 after breaching and the low and forming new low 1.2615, and within 30 minutes they came to this, but Australian dollar came above that of 97.42 and stayed there for 30 minutes during my talk. So I took a buy in the case of euro, buy in the case of GBP at market, and also in the case of Australian dollar, kept the limit orders or the exit levels for them, and also the hedging orders to limit the risk, because my reading at any given time can go wrong because there are so many attributes. I may not be able to follow all the attributes coming from various parts of the world. So I might be looking only for that of the data release times, etc. But there can be an unscheduled data release, or there can be some of the news, unexpected natural calamities, and that sort of news can come at any given time. So I do not want to take risk. I want to be aware of all those things, what are going to be as an unscheduled release of the data or the events or the news. So in such a scenario, I keep 30 pips hedging order. At any given time, I try to take only 30 pips risk in the market. And once the market goes up, even though I just studied them, depending upon the type of moves they have done it, still I kept the hedging order to limit the risk. Once the position made profit, when euro went up to 26.56 and 70, 65 and things like that, I kept stop at entry, just about 15 to 20 pips. And stop was placed at the entry and the entry stop order was removed. So basically I eliminated the risk. Even though if they make a drop during the next session, I will not incur any loss. I will have a better level to enter into the market. Again, now you find that if it have been stopped out, suppose I attended some other work and come back and without booking profit, I would have been stopped out, and currently euro is trading around 1.2627. So in fact, they are not breached 2615 from the start of the US session from 13:30 GMT, and still 14 GMT they are not breached it. So it is very unlikely, unless and otherwise there is a data release of things like that. The data release around 14 GMT is over. Still, they are not done the downward stopping, so they wanted to slowly accumulate and gain it. So if I am stopped out, I'll just buy 20 pips below and keep 30 pips below the hedging order to limit the risk. And once the position makes profit, I'll keep stop at entry. So I need not worry about what is going to be the data, which is going to trigger the market, etc. I only read the intentions of the players. Ultimately, irrespective of the type of data release or whatever that events happening in the world, the players try to make the moves according to their wish. So I like to read their intentions or their wish in making the upward or the downward moves in that of the currencies, and not based on the sentiments created in the market, or not based on the data release and things like that. Because every day you come across around 8:30 GMT, there will be a data release, 12:30 GMT, another data release, and 14 GMT, there will be another data release. Next day again, there will be a data release on a daily basis. So when they try to release the data, that 8:30 GMT, they release the data pertaining to that of GBP. GBP came down below that of 1.5737 and formed a new low, 1.5679, and they started gaining the levels. So what it implies, and that is just an impulsive move on the downside to hit the stops, and afterwards it has started moving upward. So what happened to that particular data, the influence of that particular data in the market? It was short-lived, just for about 30 minutes, and within 30 minutes they came above that of the psychological level, 1.5701. So the data release is being exclusively used to make stop-ins by that of the players, nothing more than that. So we need to read, understand the reality, what is happening in the market. So I also taken a buy position at 1.5701 and kept an entry stop 1.5671, 30 pips below. Once it started making profit, I just kept stop at entry and closed around 57.34 when they just gained the levels and started making a dip. It was closed. And in the case of Australian, similarly, I just taken a buy around 97.42, the initial low level. And that is the first currency I identified because I know that commodity pairs, they use it to lead the rally and lag behind. And now even you can see that commodity pair, Australian dollar, has not come below 97.42, even though euro has just made a dip, GBP has made a dip, but GBP is still above this particular level. Australian dollar is well above this particular entry point. So you have to understand how they are making all these moves in order to handle the majors as well as the crosses. For that, we need to understand the timings followed by the other players. So what are the timings? So they divided the entire 24 hours day into 3 sessions. So 0030 to 7 GMT is the Japanese session. In between, you come across 7 to 7:30 GMT, a gap time. Why this gap time? Because the banks which are situated in certain parts of the world, they close their normal trading for their currency conversion, close around 7 GMT. And the banks which are in European region, they start placing the orders for the currency conversion around 7:30 GMT. So there is a gap in between these two. And at that time, the players use big orders and specific orders and try to hit the stops. And that is why I call it as a gap time between the order placement by that of the bank with regard to currency conversions. So they try to make use of it and try to hit the stops of the traders. And during that normal hours, if they try to use a specific order to try to hit the stop, and they will be vetoed because there will be huge currency conversion orders and that could fill their orders. Then the players may not be able to earn it. So we need to understand quickly they made the drop in the case of euro below the psychological level 1.26 now. So let us watch how they are doing this particular stop and again. So we will not become bearish or bullish, and we will only watch how they are handling the psychological level at a given time frame. So similar to that of the European session, after GMT, first 30 minutes, 7:30 European session started. After 8, the data was released around 8:30 GMT. So they made the downward move after 8:30 and then come up. So this is slight variation they are trying to do it. I don't know why they are doing it, but purposely they are doing it again now. 13:30 GMT is the US session, 14 GMT. They are not breached the low afterwards. They are just breached the low and trying to come above. If they come above 26.15 in less than 30 minutes, we understand that they are done a downward stop and specifically with some reasons, and then till end they are expected to make the gains. 20:30 GMT is the US session. Then you come across a gap time. The bank orders do not come from 20:30 GMT to 0030 GMT. This time they make use of it, and whenever on Sunday night opening for US people, and it is the start of the Monday session, you find quick moves. They make it during this particular time frame, upward or a downward gap opening and things like that. So they follow the 24-hour cycle. So in order to understand their intentions, we also need to follow the 24-hour cycle. If you want to follow the market in 24 hours time frame, then GMT time has to be used. And once you use the GMT time, irrespective of the local time, you find that GMT time continuously work throughout the day, so that we need not convert the GMT time into our local time in order to understand the market. Instead, from our local time, we go to GMT time so that we all track the market unanimously using the GMT time. That is an advantage because the players also use it. Then we note down the initial low and the high and the net change in 4 majors and 2 commodity pairs. Around 3:30 GMT, they are referred as the initial lows and the highs. And also you come across the net change in the live market quote page, and that is the current market condition, or whether it is on the downside or on the upside from that of the previous day US session close around 20:30 GMT. Last 30 minutes, 20 to 20:30 GMT, the average level is being calculated by interbank treasury, and that is kept as a closing level. And from there, the net change is being calibrated for the next day. And this net change is to limit the moves in the market. The players cannot indefinitely rise the market or drop the market. They can do it for 150 pips on a normal day, unless and otherwise they are just relax the rule, and to 250 pips in the case of GBP. That's how they make either on the upside or on the downside. So the net change, if you follow, then it is easy for us to understand what they are trying to do in the market. So watch when the market is near the low or high, and if they are in the mid level, simply relax it. During that of the mid session, they will be in the middle level mostly. And now you find that they cut the low in the case of Euro and GBP, and in the case of Euro, but not GBP. And Australian dollar, again, they come below that of the initial low, but still not breached the new low what they have formed it. So it is only a stop end in the case of Euro, because Euro they gained it up to 1.2680 level. So they are just trying to make a downward stop, and if the stops are below that of the low what they have set, so then afterwards they wanted to rise. So if you keep a wide stop of 70 pips, 80 pips and things like that after taking a buy, thinking that I am taking the risk reward ratio of 1:3, I'll be taking a loss of 70 pips and earn 210 pips, then probably they may show the loss first. So you may not have the position to earn 210 pips. So we have to be very careful. Theoretically, so many things can be derived, but practically we have to see how we are able to handle our positions and earn from that of the market. Besides the players, the platforms providers also make a lot of tricks. I explained it many times. So we have to take into consideration all the constraints and still try to do the trades and earn. There is no point in becoming afraid of the market. Then we are not fit to trade if we become afraid of the market. So we know very well that these giants are trading against us, and we are scapegoats, and we need to outsmart and successfully earn from that of the market. Then the majors are active during that of the early and the late sessions, and the crosses are active during that of the mid session. This we need to understand. The early session is 1.5 hours from the start of the session, and late session is 1.5 hours towards close of each session. So during start and end, they handle the majors. During the mid session, it's a prolonged period of 4-5 hours, so they handle the crosses during that particular time. We need to understand that. And if you try to take a position during the mid session, our waiting period will be more. That is what during the part 1 I was telling, that they intend to make extended downward move. That is how it appeared during that of the European session. Then the extended move for 2 hours. So I just made a remark that I wanted to take the positions during late sessions, but within 30 minutes the market came above that of the initial high. So I identified that they had done the stop hunt because of the data release. They had done the stop hunt between 8:30 and 9, and then started going above that of the initial low. So I had taken the position and closed it within the session. Now the European session has started. They had done the downward stop hunt. So if they had done the downward stop hunt, we have to identify whether it is a downward stop hunt only for about 30 minutes or an extended downward move for more than 30 minutes up to 2 hours. So we have to watch from 14 to 14:30 GMT whether they cut the new low what they have formed. In the live market code page, I'll come to the live market code page. You find that 1.5883 has become the new low. So 14:25 GMT. So we have to wait up to 14:30 GMT and see that the low what they have formed is not breached. And in the case of GBP, they have just come below that of the psychological level 1.57. On Australian dollar also, they have just cut the low. 97.30 was the low, and they breached it by 4 pips. So calmly wait, don't be impulsive, and wait for 30 minutes. If they stop cutting the new low, again in the case of euro, they have cut it. So why they are doing this sort of stop hunt? They know that traders are holding the buy positions at the higher level. When the euro started gaining, a lot of traders would have taken buy and kept the stops. And even though a lot of technical analysts are telling that euro and GBP are expected to drop big, still the traders predominantly take buy positions. So in order to buy from them at the lower level, the players drop the market and just hold it. So automatically those who have taken the higher level long come for liquidation of their positions. So otherwise, if somebody just say that, no, I wanted to buy at the cheapest level, come and give it to me, nobody will come and give it to them. No? And so it is something like a story of a cap seller. No, when the cap seller was taking the rest under the tree and keeping all the caps in his basket, and he was wearing a cap on his head, and the monkeys on the top of the trees, they found that he is wearing cap, so they also wanted to wear the cap and picked up all the caps from him, from the basket, and they were all wearing. When he got up and found that no cap was available in the basket, he was looking up and found all the monkeys were wearing the caps and playing with that. So he played a trick. He simply threw the cap and removed it from his head and threw the cap. All the monkeys started throwing the caps down. He picked up the caps and just went away happily. So this is the strategy you find every time happening in the market at the lower level in the name of so many events. Now they formed the low 1.2579, cutting the low 1 pip, and things like that. So when they make 1 pip dip and things like that, it's not going to be a big drop. It is only a just fear creating move. At the same time, they do not want to drop very big and give big profit booking opportunities to that of the short sellers. So we'll come to know about it in just a matter of 30 minutes. So let me explain to you the other aspects of the market study. So basically they try to do the moves in 30 minutes time frame as one category, namely the stop and move and the false move. These stop and moves happen during early session and the late sessions. Below that of the low by about 15 to 25 pips or above that of the high by 15 to 25 pips. And a false move is the one they go up to that of the high without breaching the high and come down and breach the low. So in the case of euro, during that of the European session, they went up to that of the initial high 1.2689 without breaching it. They started making the drop and breached the new low. This is how they make the false move, followed by that an extended downward move. And the extended downward move, if holds more than 30 minutes, that means they continue to cut the low beyond 30 minutes. That means they wanted to hold it below that of the initial low for around 1 hour and 30 minutes. 3 times they try to cut the lows and stop. And when the traders think that it will drop further down because of the technical reasons and things like that and sell, they absorb all the sells. And also those who are holding higher level longs are seeing that the market is not at all recovering, they will try to liquidate the long positions. So when the players sell and bring the market down and hold it, all other traders liquidate their long positions and they accumulate all the buys, the sells, and take the lowest level buy for the season. And they cannot just buy at one level. It is not possible because their volume is 2/3 of the market volume. So obviously they have to drop and then accumulate their buy positions. And in one go, they simply gain the levels using some attribute. Something is resolved and things like that. Take a very big rise and everybody become bullish. At that time, they happily hold the market at a higher level without giving profit booking opportunity for the short sellers and happily liquidate all their long positions. This is what they do it during that of the cycles. So now you find the seasonal cycle which happens once in 4 months, and that is what they have done the whole of May, the downward move in order to make a very big rise. And I already explained during part 1 that during this month of May and June, the drop was expected in the case of Euro and GBP. When I had given the yearly forecast, I made a remark about it. And these are all buy opportunities. Afterwards, they are expected to make a very big rise. We won't be knowing at what level they are going to reverse it. We may do so many studies like moving average studies and supports and resistance, Fibonacci retracements, and the players are not here to obey any of those things, and they wanted to create confusions and create the market fear. That is why you find day in and day out the market fear prevails in the market. Then if they take the market in the same directional move on the downside for more than 2 hours, then it is expected to be an intentional move on the downside or the upside. So after 2 hours also, if they cut the new low 1.2579 in the case of Euro, understand that they breached during that of the Japanese session, and it could prevail during, in the US session. So it could prevail during that of the Japanese session, the second session, and tomorrow during start of the European session, they could make a downward move, just pretend as if they are going to drop it and then totally reverse on the upside. So don't think continuously they will drop. They have to give the upside move. If you identify the move, you can say straight away when they are going to do it. Now the time is only 30 minutes and they stopped cutting the low. It is 14:32. They stopped cutting the low. Just watch for another 10-15 minutes if they don't cut the new low. And safely, if you want to trade, if Australian dollar come above 97.42, you try to pick up. You will be able to see the profit in the trades. So identifying the type of moves is easier way of taking the positions in the market. But still, the element of risk will be hanging on our head as long as we are in the market. So we have to eliminate the risk by keeping 30 pips stop or 30 pips hedging order. And if the hedging facility is not available, then we have to keep the stop necessarily. And once the position makes profit, we have to keep stop at entry. In case if the hedging facility is not available, then try to keep the stop and then also see that you try to enter into the market at a safer level, like going above that of the initial low, and the market stays above that of the initial low for more than 30 minutes, then you try to take a buy. Definitely the stop will not be hit. You'll be able to earn 20, 30 pips or 40 pips profit in such trades. The hedging facility is available. You can do the bottom fishing when they are making downward stop. You still keep the hedging order to limit the risk. You won't be knowing whether they could further make a drop and make it as an intentional move. In case if they make it as an intentional move, you have got various trading opportunities. You can simply book the profit on the downside in that of the hedging and keep another 30 pips below hedging order, and when they start gaining the levels, you just trail the hedging order upward until you are able to keep stop at entry in your buy position and book profit on the upside move of the market. So that way you can do it. Otherwise, simply close the buy when it is making loss for more than 30 minutes to 2 hours and hold the hedging and close the original position with 40-50 pips loss, and you will find 20 pips will be protected in the hedge, and when the market drops further 30 pips, you will be at break even, and if they drop further downward, you will be in net profit. So you can close the trade on the same day also. So ultimately, whatever be the type of forecast or the market reading, the trading strategy alone will eliminate the market fear from your mind. And second important aspect is take very less position. At a given time, take only one position. When the going is good, keep stop at entry. Then think of another position in some other currency. And if you try to accumulate more positions and then suddenly market reverses, then all the positions take away the usable margin from your account. Then the fear grips in. Because the players cannot induce fear if you are a disciplined trader taking only one position at a time. Now coming to that of the trade, to that of this session, and they formed the low 1.2579 and they breached it in the case of Euro. And still in the case of GBP they are not breached the low, and Australian dollar they breached the low again. 97.21 was the low and they breached 97.14 has become the low. So what do you have to do? Wait for 2 hours and see whether they are continuously dropping or just going to reverse it. And I also given another indication. If they are just dropped in the case of the currencies more than 75 pips, net change, then the reversal is unlikely. So now you find that Euro is making 102 pips negative net change. So reversal in the same session is unlikely because they just made a pullback and made the drop and showed the new low. They are holding it. So as the time proceeds, the traders holding high level long will become afraid and liquidate the long positions. So they will not just rise and give them the profit booking opportunity unless and otherwise it is going to be a reversal time. And that can be indicated by Australian dollar. Australian dollar also just cut the low and formed more than 75 pips negative net change, and it is holding below that of the initial low 98.42. So the downside move could be limited, probably about 5-10 pips or 15 pips and things like that. And it is not worth taking a sell and buy trade. So we have to see the probabilities and instead keep away from the market and see them, let them settle it, let them just settle the score with it of the long holders. Then afterwards you can buy, then they will try to trap the short sellers. We'll try to book profit at that time. So there is no bullishness or bearishness involved here. It is a question of reading the market. What they are trying to do is whether a buy and sell trade will give us a profit or a sell and buy trade will give us a profit. That sort of judgment we need to do it. And if you go in for a sophisticated calculations, probably we will be spending a lot of time in doing the calculations and market may not wait for us. We would have missed that opportunity. So instead, using a simple live market code page, if you just use all your analysis, then you are able to fine tune your entry. and try to grab the position at the market or about placing a limit order of 3 to 5 pips or 10 pips below the market and try to capture it on a buy side or on the sell side. So when you see the real price action, we'll be able to determine what they are trying to do in the market and why they have made the drop. There might be so many attributes. Are they going to continue with the attribute, or if the attribute is going to be short-lived and later on they are going to reverse the market? These understandings are very important to become a successful trader. Now again, they continue to cut the low in the case of euro. It has become 110. So the next chance is 125 pips, the next psychological level, or up to 150 pips. That could be the drop they could do. But nowadays, I find that most of the occasions, they don't go to that extreme level of 150 pips in the case of euro and 250 pips in the case of GBP. So they just do only limited stop-ins and try to grab all the sells from that of the traders. So I'll focus the camera over that of the code page now. I'll try to answer to the questions which are asked here. If you've got any question, you can please ask it in the hotcom window. I'm willing to answer to the questions. So I have not taken any position during that of the European session because after 30 minutes, they have not come above that of the initial low or the recent low. Then Yash. What is this type of move in that Euro USD and USD CH? Okay. Now, Euro, they have just made the drop of 111 pips, whereas in the case of CHF, they gained only about 82 pips. And if you see the ratio between Euro and CHF, it is 1.0 currently. So that means when Euro is making 100 pips drop, CHF is supposed to gain about 120 pips. Instead, they gained less. This is one of the contrarian moves. They try to do it in order to hold Euro CHF around 1.29 for a prolonged period. And it's a patient testing game. And when USD CHF was making a drop, they just made every day 20 pips drop. Below the parity when CHF was dropping last year, and they just made 20 pips dip and hold, 20 pips dip on a daily basis and hold. So this is a patient testing game, and finally they made 1,000 pips drop in the case of USD CHF and quickly reversed it on the same day. In the same way, now they are doing it in the case of Euro CHF. Anybody holding long positions will lose the patience and liquidate it, because they will see that their money is not working in the market and sell it. So that means somebody is buying here. That means they wanted to take it to the higher levels. Similarly, Euro GBP, they have been holding around 0.88 and 89 area for a prolonged period. And I was telling the webinars that they wanted to drop it. They are building sell positions in order to drop it to 0.80 and 0.78 area to bring it to the normal levels. And at that time, it was not at all appearing like that. They dropped it to 84 and again went up to 88 and 89. That sort of moves. They have been doing it. Finally, they have done it. Similarly, in the case of Euro CHF, they wanted to rise it to the 1.30 area. For that, they are doing a prolonged downward and lower level consolidations here. Then Jack. You mentioned that the commodity pairs lead the rallies. Does it happen all the time? Yes, sir. Watch it carefully. You will be able to understand it. It will lead the rally and lag behind. Once it lag behind, you have to understand that they wanted to reverse it. On the downside move, if you have noticed in the case of Euro and GBP, they have been holding at a higher level, 1.34 and 1.62 and things like that. Australian dollar was dropping from 1.07 to 0.60502 like that. Now understand, that is what I was telling, that don't, looking at Euro and GBP, don't bet on Australian dollar, because at that time many people are telling Australian dollar appears to be the strongest currency in the world. And I was giving the remark, they are all short-lived status. Like safe haven. Safe haven is is given to certain currencies on certain time frame. Afterwards, it is withdrawn and given to some other currency. And they are all nothing but attributes. And Grigor, Euro USD, dollar, that is Euro USD is breaking some very long-term support. Okay, just see what the long-term support they try to breach in order to give the confusions to that of the technical analyst. And later on, how they reverse it, we'll be able to understand. And this sort of moves, this is not the first time they are doing it. Several occasions they have done it, not respecting the long-term supports or long-term resistance. And when euro went up to 1.60, people were clueless up to what high it could go. And GBP went up to 2.11 because they are not trading, those levels were not seen at all. And that sort of moves, they do it in the market. They are capable. At that time, the volume was extremely good. So they are able to make such moves and earn very big money. Now, they have to do on a daily basis upward stop and downward stop to earn their money. It is unfortunate. Then Greg, where do you see Australian dollar in the weeks and months ahead? Australian dollar is again expected to make a rise and come back above parity. Will come across in next quarter. It is not going to just like that fall as such. Then Hardy, how low euro is expected to go? See, just estimating a level when they breach the level and become disappointed, and these things, is not going to help in trading decisions. And that is the main reason when they breach the supports and go down immediately, traders turn bearish and start selling, liquidating at least their long positions. These sort of scenarios invariably make the traders distrust traders. Kindly get rid of such ideas, because never ask such questions. Is the bottom is formed, or the market, is it going to be on the recovery mode? When you ask such questions, when they make a small dip, you become frustrated. You identify by yourself what sort of moves they are trying to do it. Then, once you understand on your own, the fear will not be there. How the fear can be driven? Only by surprise. So, by breaching all the psychological levels or the long-term support levels, they induce such surprise. And that surprise on the downside or the downside, it could be a fear. On the upside, it will be a surprise. When they take it to the new highs and things like that, it will be a surprise. Ultimately, this is the strategy used by the other players to handle the herd of traders. And we are all the herd of traders. That is why we continue to change our mindset. So Hardy, is it expected to climb back to 1.30? Yeah, it is definitely expected to climb back. And if you see the past histories, none of the occasions, even when the world was in so much of recessions and things like that, the currencies have reversed. Gaining another 500 pips or 300 pips is not a big deal at all in the market. And so if you just ask such questions, when they drop another 25 pips, you will immediately say that I am misguided. Because ultimately you are perceiving 500 pips in one go. It may take several days because you don't take into consideration the time frame associated with that. So if you want to trade now you have to protect your equity. Now you have to protect your trade. These are all the prime importance. So kindly focus on those things in order to protect your equity and in order to fine tune and decide on the entry points, etc. That will really help you in becoming a successful trader. My humble request to that, to the traders. And mesh. With GBP at the moment, do we wait until either the low made this morning is breached? Yes, in the case of GBP, they are not breached because they already done the downward stop and not gained much. And whatever they gained, and I think a lot of traders would have turned bearish and liquidated the long and turned short. That is why they are holding it. And in the case of euro, longs would have built up, Australian dollar also longs would have been built up. That is why they have done it. But they may not come to positive zone. Very rarely they come to positive zone whenever they drop more than 75 pips or gain more than 75 pips. And they could reverse after certain levels, but don't expect them to go to high. They may come up to that of the initial low or slightly to the middle level depending upon the trader's orders, and then next day they will continue the move on the upside. That will become the intentional move. When they make it as an extended move for 2 hours now, the next move will be intentional move starting from the late US session and that of the European and Japanese and the European session. Then only they will try to make another downward stop. If you track them carefully, you will be able to understand. They are continuously cutting euro now. GBP, they are holding it. This is mainly to handle euro GBP. You have to watch what they are trying to do in respect to currencies, and you can, if you look into the chart, you can only look into the chart of a specific currency. If you look into the live market code page, you can simultaneously see all the majors in the credit pairs, then understand what currency they are trying to do it. Now euro yen, they continuously drop and it has become below the psychological level 100. So this sort of fear they can create by making drop in the case of euro. It is not in the weakness of euro. They can gain it again. It's not a big deal. And when USD yen is dropping, euro is dropping, a contrarian move, by that you find 159 pips they are dropped in the case of euro yen. So when they drop, it has got a purpose. They are buying it. They drop and buy, rise and sell. Then Tetra. Kiwi has not breached lows. They have to buy. Yeah, when they are not breached the low and from the start when the currencies, that means they wanted to drop Australian dollar more when compared to that of New Zealand dollar in order to gain levels in the case of Australian dollar, New Zealand dollar cross. Without looking into it, I can tell you because it's 101 pip negative net change and New Zealand dollar 81 pips negative net change. So it is lesser, so they wanted to rise. You can easily conclude that way. Okay, sure. Rajesh, your session, which levels are used to identify the moves? You can just take the current levels also to identify the moves. It's not difficult at all. You can still refer to initial lows and the highs, still it will be beneficial. Grizzle, do these moves indicate that the herd of traders are still long? Yes. Predominant of the traders are long, even though a lot of explanations are there pertaining to that of technical drop. Still traders are long. That is why free players are dropping it. If all traders are short and players are not here to drop and give profit to them, then Jack. Euro USD is making lower low, yes. And does it mean that GBP is stronger? See, these are all relative strength and weakness from time to time, not a permanent thing. In order to drop Euro GBP, they are doing it, holding GBP. And European session, they have been making drop in the case of GBP holding euro in order to gain levels. I was telling at that time that they wanted to gain levels and hit stops in euro GBP on the higher side, and people said that it can go to 81. I told them that they wanted to make only a stop and before making further drop, and they do not want profit booking opportunities in the long-term traders who are holding euro GBP cross positions, and especially the currency conversion traders. Then yeah. When will be the euro submit? Sorry, that is okay. What is your outlook on USD CAD is expected to again gain the levels. They gained it about 81 pips when Australian dollar has dropped about 98 pips. Still, it is a lesser gain, but slowly they are expected to gain the levels in the case of USD CAD. And I was explaining many times that they wanted to do only that of the contrarian moves. No? That is gain levels in the case of euro, USD yen, GBP, USD CHF and Canadian dollar. Australian dollar is the one they will gain, and again they are expected to make the drop during this particular year. So let me go back to that of the PowerPoint presentation. So I have not decided on any trade because in the case of euro they have just breached the low again. I wanted to see in Australian dollar they stop cutting the low till 2 hours from the start of the session up to 16 GMT. But during mid-session, it is not advisable to take the positions. And either during the early session or late sessions, we can take positions in the case of majors. Otherwise, we can focus on the crosses like Euro, GBP. You can take a buy and things like that. And you have to use the hedging order to limit the risk. In the case of crosses, you have to keep 50 pips hedging orders, unlike that of the majors where you can keep 30 pips hedging order. So I take this opportunity to thank FX Trade for the nice opportunity to present the twin webinar on tracking the forex market together on a monthly basis. And my website, I have given it my contact details, dr@i-noindices.com, and my MSN chat and the Yahoo chat messengers. I have given it, and also the phone numbers in case if you want to contact me for further clarification, not to become a member and so that. I am just interested to give the clarifications to that of the traders in case if they got the doubt with regard to my trading system. Then I'll come back tomorrow during yet another session of Asian Session Live Market Analysis by 5 GMT. Thank you. Wish you happy trading.